What's good, guys? Welcome to the Market Prep Workshop, right? Welcome to the Market Prep Workshop. This is going to be the number one step-by-step introduction to trading in the financial markets 2023. Okay, I am Maverick, your host, the founder of the Traders Guild, and today we are going to be having an overview. All right, the next 4 days are going to be very simple, right? I feel as though it can be very simple how it is that you get started trading in these markets, and the rules that I've followed to be able to be profitable in these markets, right? So day 2, we're going to be going over market structure and price action. Day 3, we're going to be going over advanced technical analysis and fundamentals. And day 4, we'll be going over risk management, money management, how to be profitable and professional and successful as a trader. Now, today, we'll be going over a couple of these different terminologies, who I am, and how to get started in this market, in these markets, I would say, right? In these markets. Now, who am I, right? My name is Rashawn Robinson, known as Maverick. I'm a business owner and a professional day trader, patriarch of my family, of course. And, I was introduced to trading back in 2018. I was kicked out of my house when I was 17. I wasn't gonna go to college. Decided I wasn't gonna go to college, and I got a dog, so that was just not gonna fly. Now it was cool because at 17 I had become a manager at my job, so I started making money and saving up money as much as I could, but I was spending it too. But I ended up getting a work from home job from Apple, and that pretty much paid my way at first moving out. Between 18 and 21, I worked 18 different jobs. I worked in HR, worked in management, worked in warehouses, gas stations, food, right, kitchens, sales, all types of different jobs. Worked as a server. But towards the end, I was working in that sales department. I did merchant processing sales, and selling insurance, right? Selling insurance, life and health insurance with State Farm. So that was, I had started making good money, right? I had started making good money, even though I didn't get a degree. I was working a better job than most people my age were getting, even coming out of college. And I just realized that it wasn't what I wanted to do. I wasn't able to invest in my business. I had the time, I had the money, but I didn't have the time, right? And so I was like, okay, well, I had been laid off before. I had lost my a job before and survived. I was hustling, doing what I needed to do. And so I was like, look, I'll be able to figure this out. And so, I took all the different business ventures I had, all the streams of income I had, and I just put myself to work. And that's just what was happening at the time. And so at that same time I took that leap of faith is when I was introduced to trading. I was invited and taken out to a large event with thousands of people. This is the first time I was introduced to people my age, younger than me, didn't speak the same language as me, but were making just as much or more money than me from their phone in less time. And so it really shifted my perspective of how I was going to get rich. I always knew I was going to get rich, but this shifted my perspective of knowing how I was going to get it done. Okay. So, once that happened, 2020, is when I really got serious about my trading journey, right? Between 2018 and 2020, we built a family business. My mother and I were able to build that up to 6 figures. And so that was smooth. But as far as going to the next level, I wanted to trade, right? I wanted to trade, wanted to be able to put my money to work, multiply it, and take that and scale up my businesses, scale up my ideas. And that was the vision, right? And so in 2020 I was introduced to so the right people, right? The right environment, a couple coaches, a couple friends. And over that, last 2 years, really have developed my ability to read price action, read the charts, my understanding of fundamentals. I've been able to, become a funded trader, right? Trading for prop firms, and we'll explain what that is on this call. But that's what I've been able to do. I've also, I would say my first 2 years, I was a pretty profitable trader. I know that's not a lot of people's experience. But my first 2 years, I was able to see a return. I would say I made a good amount of money, but then I lost a good amount of money. But out of that, still was 5 figures plus in profit. So definitely grateful for that experience. But I know that it's time to take it to another level. At the beginning of this year, I knew that, and so I really, I found ICT, really focused in on learning, advanced trading concepts, and, just, sharpening my eye for my entries, sharpening my risk management is really where, this year becoming a funded trader and trading for these prop firms really turned me, it really caused me and forced me and molded me into a very disciplined and professional trader. So that's what's allowed me to become successful when it comes to trading these prop firms and, really being able to build a career that way. Okay. So let's start with why. Right? Let's start with why. Why would we start with why? Because directions are instructions to explain how, okay? But direction is a vision offered to explain why. And why is a lot more important than how, right? It's a lot of people who figure out how and they don't last long, especially when it comes to things that are going to cause tribulation. Or, the crazy thing is that in trading, there's people who have made tens of thousands of dollars, hundreds of thousands of dollars, and thousands of dollars. I have friends who've made thousands and they've lost it all, right? They've lost it all because they never learned to be the thing, right? They never learned why. They never saw the bigger picture. It was always just focused on making the money, making the money, making the money. How do I make the money? But at the end of the day, that's not the only focus, okay? I mean, there's people who have taken their own life because they've lost their money in this thing. So it's not a joke. So you don't want to just learn how, you want to learn why is trading so key. Okay. Now, trading versus investing, right? I want you to know the difference between trading and investing, right? So when you think of trading, think of something short term, right? Think of a short term investment, right? Something that you don't have intentions, a short term investment in which you have intentions of making a profit on. In other words, you're riding the wave. There's no real ownership. Okay. This applies to the markets, but it also applies to life, right? If I'm selling a book and you buy the book from me, but you have no intention of reading the book, your intention is to sell the book for a more expensive price. That is an example of trading. Okay. And that's what's happening when you trade in these markets. You're not having ownership over a stock option. You're not having ownership over a currency. You're simply trading it, right? Maybe you're purchasing a contract that is even going to say that you believe it's going to go in a certain direction and you would make a profit off of that, right? So you're really just getting in for the sake of the profit, not for the sake of ownership, belief, long-term dividends, payouts, anything of that nature. And that's what investing is, right? Investing is when you're buying ownership, right? Buying into ownership of a company or an idea, or, when you're, buying into a person, right? You might invest your money in an assistant or a manager or somebody who's gonna, be able to help you build your business, right? These are things that are, they're meant to generate you a return on investment long term, right? These are things that you're gonna be having ownership over or a say over, right? And typically these stocks or, well, let's say you were somebody who invests in companies, right? So you bought a company, or, let's say that you're a real estate investor. So you purchase properties and they give you a return over time. And if you sell it, right, those are investments and they're meant to be long term. So you don't want to, go into investments thinking they're going to be short term. You might as well trade then and understand the difference and what type of person you are and what results it is you're looking to gain, right? Now, there's two types of income, and some of you guys probably have seen the cash flow quadrant before by Robert Kiyosaki, but I want to talk about it today because a lot of people, they consider trading to be passive income, right? And what you want to understand is there's two types of income, right? We have linear income and then there's passive income, right? So linear income is pretty much over 90% of the world, right? Over 95% of people is either employed, so they're exchanging their time for money, or they're self-employed and they've been able to gain a skill set where they can start their own business, but they don't have anybody working for them and they don't have any systems working for them. They only get paid when they do a job, right? They only get paid once and then they have to do it again and again to keep getting paid and getting paid. Every time you do the thing, you get paid. That is linear income. When you do, you make money and that's it, right? Now, when you talk about passive income is going to be your entrepreneurs and your investors, right? Entrepreneurs have a system, aka a business, that is making them money. Investors know how to put their money in certain places so their money can return them money, right? Sometimes investors might invest in entrepreneurs, right, so that entrepreneurs can generate them money. Okay, and that is 1% of the world. Now, the majority of people would say that and trading is in passive income. It's a version of investing, but I just told you the difference between trading and investing, right? Trading is actually a linear income. It's just very lucrative, right? So our goal is to take that income from trading and then invest it into businesses, assets, or people that can generate a passive income, right? So that is the idea behind the trading. Now, of course, you need money in the first place to trade, right? So that means you need to get a job, or maybe you need to have a hustle, or you need to have a skill of raising money, right? Maybe being a fundraiser, if you have a hedge fund or something of the nature. Either way, you need some money. When you get that money, you can add it up together. You could trade that money in the markets, right? And then you can take that money that you've now traded and you can invest it into a company. You can invest it into a multiplier that over time is going to pay you out dividends, or as it grows not only will not the money will grow, the asset will grow, and then the value of the money will have gone up and you will make a return on investment from that, right? So the idea is we want to develop a lucrative income. I'm telling you, I love trading because at the end of the day, it's lucrative, right? If I'm going to spend a short period of time, right? A short period of time, I can spend an hour to 2 hours to make the amount of money that somebody will make in a day, in a year, in a week, right? In 2 years, right? So at the end of the day, yes, it is an income where I have to spend my time still to trade, to mark up the chart, to take the trade. But at the end of the day, I mean, hey, it's worth it so that I can get that money and then invest it, right? Whether that's maybe in a robot that's going to trade for me, or whether that's in a business, or whether that's in, like we said, some assets, okay? So what is the definition of a trader, right? What is the definition of a trader? A trader is a person who buys and sells goods, currencies, or stocks. All right. So a lot of people, they have it all confused. They think that just like the book analogy I gave earlier, right? Everybody is a trader, right? Entrepreneurs are traders. Even the people trading their time for money are traders. Okay. But indefinitely for me, entrepreneurs are traders, right? You're taking a good or a currency or a stock or an asset, and you're trading it so that you can make a profit. All right. And I want to really, I hope people really get that, and just really bridge that gap between entrepreneurship and trading. Entrepreneurship is trading, and trading is a business. Okay. So a trader is an entrepreneur. And today we're going to focus on trading currencies / stocks. All right. So as of today, January 2nd, 2023, the different financial markets that you're able to trade in is the foreign exchange market, which we'll talk more about. The stock market, which is home to some of, the largest, companies around the world, such as Tesla, Amazon, General Motors. You can also trade stocks in groups of stocks called ETFs, right? Then you have the derivatives market. This is going to be where you're not necessarily trading an asset, right? You're not necessarily trading the actual currency or the actual company, right? You're trading a contract or a security that says that you have a future purchase or sale of that asset. Okay, so you're not actually trading the asset. You're trading a contract that represents what will happen with the asset in the future. Okay, so this is a good way, of course, such as people like us to for traders to take advantage of trading options and futures and different CFDs through speculation and not necessarily actually have to own the asset, right? And this is how people are able to trade stocks without actually owning the stock. Okay. Then you have the commodity market, which is going to be things like gold and silver and oil, wheat. Okay. We're sitting here talking about trading assets and stocks and currencies, but there's a lot of people who still do to this day trade gold or silver, whether it's, a contract or security, online, or whether it's buying the actual physical thing. Excuse me. Right. And so back in the day, there's people who were at one point trading cotton, right? Trading wheat, sugar, right? So, it's to this day, there's people who still trading those things, right? Keep an eye out, okay? There's a point they were trading bacon, okay? So, though that's the commodity market. And then when it comes to cryptocurrency, this is the newest emerging market in the world, right? And cryptocurrency, I don't know, no matter what anybody tells you, right? The more people talk badly about it, is the more you should probably be doing your research, okay? Is because cryptocurrency is the future of not only currencies, right? But even stocks, right? Even stocks, right? Even stocks, even businesses, right? Some of these cryptocurrencies that we're investing in are not just they're not just simply currencies, right? Some of these are businesses, projects, ideas that we're investing into the token behind them, and it's funding the project, right? It's funding the idea. Okay, so that's the cryptocurrency market. And like I said, not only just currencies, but also assets. Capital markets are pretty much stock markets as well. Money markets are pretty much banks loaning each other money. And then you have the insurance and mortgage markets, because insurance companies are extremely liquid. So if you do have a policy with one, you can get a policy with one, and guess what? They'll trade your money, just like I'm about to show you guys this week, for you, and you ain't got to worry about it. But guess what? They not gonna pay you out what they're making on it. They're gonna pay you out the little bit of crumbs. Okay, so what is it that we actually trade? All right, now I primarily trade in the foreign exchange market, the stock index market, and the cryptocurrency market. All right, now as far as cryptocurrencies go, I actually do not day trade those anymore. I've reached the point in my career where I don't necessarily desire to expose myself to risk that I do not have to expose myself to, right? And I have enough opportunities in the foreign exchange market and stock indexes for me to make money without exposing myself to something like crypto on a day-to-day basis. That is very volatile and heavily impacted by what's going on in the world by even a hair drop. Okay, so I do still invest in cryptos, and you remember the difference, right? I invest in cryptos long term. However, I primarily focus in the foreign exchange market and stock indexes. And that's typically what we trade here. Okay, so you do have some information here you guys can check out. But the foreign exchange market is the largest financial market in the world, right? It's well over 10-20 times the size of the stock market. It trades over $6 trillion a day, and it's grown exponentially over the past 20 years because of trading, around the world, at computers. The fact that we have online brokers now, right? These are all things that have contributed to it growing from 1.5 trillion a day to 6 trillion a day. The reason that we trade in this market, right, is because the foreign exchange market is a market that is open 24 hours a day, right? So you can find an opportunity at any time of the day. You don't have to only find an opportunity at one time. Not to say that, that means that every time is the best time or is the, most liquid time to trade, but it is available. Unlike the stock market, which is from 9 to 4, and it's just a lot less versatile. Okay, and it's open 5 days a week, and so that's one of the reasons I love the foreign exchange market. I love the fact that it has a low barrier of entry for newer students. And I love the fact that the prop firms that they offer. Not to say that other ones don't, but I am going to be learning the futures market this year, so that should be fun, right? But right now, the foreign exchange market is what I've been trading the past 2 years, and studying for the past 4 years, right? Now, over the last 2 years, I've also learned how to trade stock indexes such as SPX 500, which is the top 500 companies in the stock market, right? And then you have NASDAQ 100, which is the top 100 tech companies in the stock market, in the New York stock market. And then you have Dow 30, US 30, which is the top 30 industrial companies in the New York stock market, right? And so these are, groupings of companies and stocks that move very quickly, very volatilely. or with a lot of volume, if I said that correct. And so I do like to trade those. I mean, I get ample opportunities between the two. If I don't find opportunities in the foreign exchange market, I can find opportunities in stocks, and vice versa. If I can't find them in stocks, I can find them in the foreign exchange market, right? And then, like I said, I don't typically trade crypto, but I do invest in it, right? So that part. Okay, so what are you going to need to know, right? What are you going to need to know? So here's the different terminologies, and we'll go through these rather quickly, right? We'll go through these rather quickly. So starting off, right, what is exchange rate, right? The exchange rate is the value of one currency in exchange for one unit of another, right? So if I wanted to get US dollars and I had 1 euro and the exchange rate for euro is 1.0600, then that means that in exchange for my 1 euro, I would gain $1.06. Or to gain 1 euro, I would need $1.06, right? It's essentially the cost of the money, right? It's crazy. Money has a cost. Yes, it does. And if you've ever traveled abroad, you know that, okay? Now, if you haven't, you will soon. Don't worry about it. Now, what is a pip, right? A pip represents, some say, a point in percentage, but for me, I say that a pip is the unit of measurement for an exchange rate, right? So we get paid by the pip. When you're trading currencies or even stock indexes, you're getting paid based on the how many pips the market moves, right? If the market moves 10 pips, we would get paid based on 10 pips, 20 pips. If it moves 50 pips, we get paid on it moving 50 pips. And you are able, when you enter a trade, to select how much you want to risk to either make or lose for each pip that the market moves in your direction or against your direction. All right. So when it comes to that, all right, the pip is identified as the fourth digit after the decimal place in most Forex currencies, right? It is also identified as the second digit after the decimal point in currency pairs that include the Japanese yen, all right? So, for example, the exchange rate for the Euro USD could be at 1.06, is what we just explained just now, right? But the full exchange rate is not just 2 cents, right? We're not counting just to cents, okay? So the full exchange rate would be 1.06956, all right? The pip is the fourth decimal place. So we don't pay attention to the fifth one. We don't pay attention to the sixth, right? You don't get paid by that. So that could move all it wants to. If the fourth decimal place don't move, we don't make any money. So we typically do not pay attention to the fifth digit, right? So the fourth digit, the 5, is what the pip would be in this exchange rate, right? And so as it moves from 5 to 6, from 695 to 696 would be 1 pip, from 695 to 685 would be 10 pips, right? Or for example, when the market moves from 695 to 675, it has moved down 20 pips from 95 to 75. Okay, so watch that over a couple times. Rewind that part of the video a couple times if you need to get it. Okay, now what are lots, right? What are lots? Lots are how units of currencies are grouped together in bunches. All right, so this determines how much we are risking to lose or gain for every pip the market moves. Now you're able to select how many units you would like to risk, and based on your lot size, right? Like again, the lot size groups them together. So you have what is called a standard lot, which can be fairly large compared to most people's accounts. And this is where you're risking $10 for every pip that the market moves. Or a mini lot where you're risking $1 for every pip the market moves, or a micro lot where you're risking 10 cents per pip for every pip the market moves. Okay, now I have the units listed there because some, yes, on MetaTrader 4 we use lots, but let's say some of you guys, maybe you're trading on TradingView or another platform, or maybe you're trading something like futures, you will have to select the amount of units and not the standard. So if I'm used to risking a standard on a certain type of trade, and I can only use the units, then I would have to actually type in the whole 100,000 units. Okay. So, for example, that also applies if I were to say 5 standard lots, right? So, one standard lot is $10 per pip. 5 standard lots would be $50 per pip, right? One mini lot would be $1 per pip. 5 mini lots would be $5 per pip. And same thing for a micro, would be 10 cents per pip. 5 micro lots would be 50 cents per pip. Okay. So, to give an example, right? Right? To give an example, when you are risking 5 standards and the market moves 20 pips, if it moves in the direction that you favor, you would make $1,000 because it's moving $50 for every pip it goes in profit. 50, 100, 150, 200 for up to 20 pips equals 1,000. Or if it went against you, you would have lost that 1,000. Right? And we'll talk more about risk to reward on day 4 so that you can understand how in the world you can lose more than you win and still be profitable, right? Let's say that you were doing 5 mini lots, right? Then you would be risking $5 per pip, 5, 10, 15, 20, right? So you would be profiting $100 if it moves 20 pips in your favor, or losing $100 if it moves 20 pips against you, okay? Now, how in the world are we even able to trade based on, you see how many units of currency it even takes to enter a trade, right? I mean, even on the smallest size, you would be risking 1,000 units or $1,000 just for you to be able to enter a trade. So what you got to understand is that there's something called brokers, and this is what made it so that we can even invest online, right? We were not able to invest in these type of markets before the internet and online brokers came about. Okay, so when it comes to a broker, a broker is pretty much a company that allows you to trade the markets by giving you leverage, right? If you were to think about how a bank is your example of a broker when you're buying a house, because you don't have $400,000 up front, right? But maybe you tell them, hey, I have 20,000, and they say, okay, cool. Well, we'll pay the other 380,000 plus interest, right? We'll pay the other 300,000, and you put down the 20, and you get the house, and you'll pay it off over time. Now, we don't necessarily end up quote unquote paying off the brokers at any overtime or intentionally or anything like that. But what the brokers offer you is leverage, okay? And there's different sizes of leverage, right? You have a 1 to 50 leverage. You have a 1 to 100 leverage. You have 1 to 200, 1 to 500. I've even seen leverage up to 1 to 5,000, okay? And this means that for every dollar that you're risking, they're matching you that other number. So if you're risking $1, it's for 50, it's 1 to 50 leverage. For every dollar in your account, you would be trading as if you had $50 in your account. Okay, and that's how you're able to risk, right? As if you had that much money. Okay, so a smaller leverage means that you'll be able to trade with less money. A smaller level means you need more money to be able to take trades or to be able to risk certain amounts on trades. Okay, so just be aware of that. Now, most regulated brokers, they don't even offer you anything above 1 to 50, let alone maybe 1 to 100. Right? So most regulated brokers, they're not going to offer that. And regulated brokers are essentially brokers that are based in your country, and they're regulated by your countries. Here in the United States, I believe it was a few years ago, Obama actually passed a law that would, require brokers to actually, keep their money in certain types of accounts, hold a certain amount of money in those accounts, report a certain amount to the government, a lot of things to essentially, quote unquote, protect the consumer. All right. And that caused a lot of brokers to leave. So there's, in the Forex market specifically, there's about 9 to maybe 11 regulated brokers and hundreds in other countries. All right. So not necessarily saying anything is wrong with unregulated brokers. I used an unregulated broker for my whole first 2 years. I am looking into regulated brokers now, but I've never had an issue with my withdrawal or with being manipulated in the market aggressively, right? Like, I never identified with any of those things or had that issue, with the specific firm I've been with the past 2 years. So, I won't, I would say if you're getting to the point where maybe you want to invest a lot of capital into the markets, definitely a regulated broker is going to be the safest place for your money. And it's just what it is. Now, if you're maybe new and you don't, maybe you will pick an unregulated broker. I just suggest do your research. I just want you to know the difference as far as leverage is. Typically a regulated broker is going to offer 1 to 50, 1 to 25, and unregulated brokers will offer all the way up to maybe 1 to 5,000. Okay. Now, just a couple extra terminologies you'll see on MetaTrader 4 TradingView, right? What is the bid? This is the price at which you're going to sell from, and the ask is the price at which you're going to buy from, okay? So we could say, just like the example earlier, Euro USD would be at 1.0695, but when I take the trade, I mean, the broker, it has to get something out of it, right? And then broker got to put me in somewhere. And so I might not get in at 1.0695, all right? I might, get in at 1.0693 if for a sell, or 97 for a buy, but I'm going to get placed in a couple pips further than where I wanted to enter. So I'm always going to start off fairly in drawdown rather than starting off just at zero, when I take a trade. Typically we'll start off -2 pips or one, whatever the spread is. I mean, the bid or the ask is, and the spread is the difference between the bid and ask price. So this is how you would know how many pips you're being offset, right? And that's what the spread would be, okay? Now, MetaTrader is the most common platform traders use in order to execute in the markets. You can definitely do some more research on them, but it's pretty much your broker would give you the account and login information, and you will enter that into the app and the platform, and you'd be able to access your funds and trade, right? There's an app for this, and there's a web browser for it. MetaTrader has been taken down from the Apple Store as of 2022. So if you have an iPhone and you never had it before, you would have to use TradingView or use MetaTrader 4 on the computer. But I believe Android should be good. I think Android should be good, okay? And TradingView is a charting platform I primarily use to read the markets, right? To look at price action and market structure. I'm gonna do the trainings, some of the example trainings this week from TradingView, right? And you can also now trade on TradingView as well, right? So you can use it as a platform similar to MetaTrader 4 to enter buys and sells as well as charting, okay? And last but not least, what is a prop firm, right? What is a prop firm? We're going to be going more in detail on prop firms, I believe day 4, or maybe I'll make a separate video for that. But a prop firm is essentially a company that provides its traders with access to capital in return for giving those traders a percentage of the profits, right? So there's a number of different ways that this has helped me become a better trader. And of course, the number one way for most people is the access to capital. Right, being able to pay $400 to do an evaluation to get access to 100,000 is wild, right? Credit doesn't even do that, right? And so pretty much what usually happens is that you have to pass a 2-phase demo test, right? Which requires you to make 10% profit in phase 1, and then make 5% profit in phase 2. Okay, the only rules that usually apply is that you cannot lose more than 5% in a day, and you cannot go more than 10% in a whole lifetime of the account that you're trading. You cannot go a max of 10% in drawdown, or you'll lose the account. All right. Now, once you pass both of these phases without violating the rules, you'll be eligible to trade a live account and be promoted to that live trading account, where you'll be able to receive 80% profit splits. All right. So I think this is honestly one of the greatest opportunities of this, where we're in right now, the time period we're in right now, because people are able to get access to so much capital they never would have gotten access to, honestly. And for their skill set, right? So I highly, this is what I kind of the goal behind how I teach is to really give people the value that they need so that they can go and pass a fund evaluation, whether they're an expert or not. Okay, so that's what prop firms are, and definitely we'll go more in depth on another day. But appreciate you tuning in, and we will be live tomorrow at 6. For the day 2, right? And for anybody watching the recording, of course, just tap back in and you'll be able to get the recording, and head over to day 2 with that notebook and pen. Make sure you're ready. And we're going to be diving into the markets. All right, let's go.